Ben ritrovati, siamo sul floor del New York Stock Exchange al rientro a lungo fine settimana del Martin Luther King Day. Siamo in territorio positivo, tantissimi temi di questa settimana, ne parliamo con il nostro ospite che è Kenneth Polcari, che è Managing Director per ICAP Equities. Kenny, welcome back. Thank you so much for being with us.
Thank you for having me. How are you?
I'm very well. We are back from a long weekend, back here on the floor, and we see that the market is doing pretty well. It seems to ignore a lot of the news coming from Europe and focusing on economy.
I think it's really ignoring mostly the S&P news. I don't think I think what the market's telling you is it's not really concerned about what S&P does. Everyone's well aware of what's going on in Europe in terms of the crisis. They understand what the risks are. They're not really paying attention to S&P, although a lot of people would like to think that they are. But I think the market's saying, listen, we get it, we understand, but in fact it is overlooking and it is trying to concentrate on the positive. We're right in the middle of earnings. You know, really the earnings season really is going to kick off this week. We started with Wells Fargo and Citibank this morning. Not necessarily great numbers, but you know, the financial services industry is mixed today. You know, you got some of them up. Goldman and Wells Fargo, even Bank of America were higher this morning. Citibank was under some pressure. JP Morgan was under a little bit of pressure. So that's kind of what we're seeing, and that's really where the focus is going to be. The Empire State Manufacturing number here in the States was actually stronger than expected, so that's positive data, and that's really what the market wants to see.
And also, you know, the figures coming from China, yes, the economy is a little bit slower in 2011, but the fourth quarter was really good. So the worries about economy is a little bit far away now.
Well, at the moment, that's what it feels like, right? So China did come out with good news, both industrial production and their GDP. So that's just helping calm the sense or the fear that that Europe is going to spin out of control. Now, Europe could still spin out of control. We certainly hope that it doesn't. But that fear is always going to kind of simmer under the surface until it isn't. Until they finally come up with a resolution. So the markets will pay attention. They'll remain to be cautious, but they will pay attention as we move along.
And going back briefly to S&P, as you were saying, the market is kind of ignoring it. And even the decision that it was kind of like something that the market was scared about, we thought it was like the decision to downgrade the ESFF fund.
Right.
It's not really having any impact. What does that say to you?
Well, you know, it says a couple of things. First of all, S&P did telegraph back in December that they were going to start to downgrade these countries and the fund if things didn't change. So part of it was well known. The market had priced it in. It had a reaction back in December, and the market's been kind of figuring out its way for the last month and a half. So when the ultimate downgrade came, you saw it was not a panic day. On Friday, we didn't have panic selling, and in fact, the market rallied towards the end of the day. Over the weekend yesterday, they cut the fund, the EFSS fund, but see, don't forget, that fund is going to cease to exist in this summer anyway. It's going to be replaced by the ESM fund. So the sense is I don't really think many people are paying attention, and again, I don't think the market's really paying attention to it. Partly is because, you know, S&P has lost some credibility with the markets over the last 5 or 6 years based on the financial crisis and the role that they played. In fact, there's news out today in the Wall Street Journal about further investigations into S&P and the role that they played in the whole financial crisis. So I think people are becoming a little bit numb and a little bit they're not giving so much attention to what S&P or even Moody's and Fitch are really going to have to say. I think because I think the investment community is a little bit frustrated with what has happened and their role in it.
Now, a little prediction for the week. We're still talking about the earnings season. We're talking about the banks. Yes, mixed results so far. Citigroup not so well. Wells Fargo, pretty good results. Do you think that with the numbers that we're going to see this week, we can see the rally for the financial to stop, or there's still the chances that we can carry on?
Listen, I like the financials. I think the financials are getting so beaten up last year that I think that any positive news is going to cause the financials to rally. Now, that being said, you get some blow up over in Europe, then it's going to drag them all down. But barring that, if it just continues to churn the way it is, then I think you're going to see a rally in financials. I think the earnings season is going to be mixed. I don't think it's going to be a stellar earnings season this quarter, but I think that the market's prepared for that. Once again, I think the market has already really discounted that, and you can almost feel the market wants to go higher. It's got to get through, technically, it's got to get through this level. We keep churning right here at the 1295 level. Once we break through decisively, then we'll see the momentum guys jump in. You'll see more participation. You want to see real volume kick in because that's going to give it much more legitimacy.
Great. Thank you so much, Kenneth Polcari, for being with us.
Thank you for having me.